All right, well, good evening, everyone. Welcome to tonight's webinar on day and swing trading. My name is Tyler Bollhorn. I'm the founder of Stockscores.com, and I'm going to take you through my approach to short-term active trading. We're going to go through specific examples of trades that I've made in the last week or so that you can see real-world examples of the theories that I put forward as we go through tonight's presentation. This will take about an hour, and I welcome questions, but as I said just before we started, I will answer questions more so at the end of the presentation. All right, so let's dive right in. Here is our itinerary for this evening. We're going to cover my 7-day and swing trading strategies. So I will list off the 7, I'll give a brief description of each, and then I'm going to dive deeper into 4 of them. And in diving deeper, I will give you examples of recent trades from last week, the last 10 days, some from today. I will show you the performance of the trade and different metrics for how we measure that performance. And so you'll learn about things like reward for risk, risk tolerance, capital required, action candles, message candles, my indicators that I've used. And these are the tools I've developed that provide an edge to whoever uses them. And I, have people that are my students that use them, users of Stockscores, and I'll talk about how you can have access to those tools as we go through the presentation, the different services that I offer. And then at the end, we're going to walk through very specifically, one step at a time, some recent trades from the last few days. We'll look at a day trade where it was a $1,600 profit and how much capital that took, how much risk you had to take in order to make that $1,600. And then we'll do the same for a swing trade, which made about $1,000 over 3 days. Now the swing trade takes less time to execute. You don't have to sit by your computer all day long. Most swing trades, the signals come in the first half an hour or maybe the first hour, but usually the first 15 minutes, to be frank. And for people that only want to put in that amount of time and then can monitor their positions through the day from their phone, from an iPad, what have you, swing trading is a great option. For those who maybe want to be a little more full-time, then day trading is certainly an option. You can make more day trading because you're going to be more active with it, but it does take more time, and I'll talk about that as well. All right, so what I want to begin with is just some basics so that we're all understanding the basics. And I don't assume that anyone here knows anything about trading. We'll get into some fairly sophisticated things as we go on, but the starting point are the basics. And so let's just describe what is day and swing trading. So day trading is holding a stock for less than the day. They don't hold overnight. So when we talk about a day trade, here's one from today. The buy point was right here, and the sell point was right here. We're going to go through the specifics of that later, but you can see that that was at about just a little after 10 o'clock, and the exit was 45 minutes later. So that's a fairly quick day trade. My typical day trade has a hold period of maybe a couple hours, few hours typically, and swing trades usually a few days. A swing trade is where we hold for at least overnight, and it's usually 2 days to 2 weeks. So in this case, the entry point was here on April 2nd, and the sell point was here on April 4th. So that's a 2-day hold, and basically played out over 3 days. And whether one is a day trade or a swing trade, how we decide that really comes down to the time frame of the chart we're analyzing. So I have a strategy for swing trading. Typically, that's using a 13-minute 10-day chart, which is what you see here on screen. And if I was day trading, typically I'm using a 3-day 1-minute chart, which is what you see here. However, beyond that, the concepts are the same. The entry points, the strategies for entry are very similar, whether I'm day trading, swing trading, or position trading for that matter, which is the longer term style of trading, which we'll discuss in tomorrow's webinar. All right, so that's the basics of day and swing trading. We're going to dive into these charts, and I will describe what all these dots and lines mean as we go through tonight. I want to talk a little bit about how I came to figure this stuff out, how I reverse engineered the stock market. When I was a university student studying finance at the University of Calgary many moons ago, back in the late 80s, early 90s, I had a great interest in the stock market. I had friends, we all traded the stock market together. It was very different back then. We actually had to phone a broker to place an order. There was no internet-based trading when I first started. And so, we would have tips about mining stocks or oil and gas stocks. I grew up in Calgary, Alberta, where that was the main thing that people traded. I used to hang out at the Alberta Stock Exchange, which is no longer. And I hung out there because they had real-time quotes on terminals. They had, I think, 3 or 4 real-time quote terminals outside the trading floor for the public to use. And there was 30 of us that would just kind of hang around there and make trades, not really day trades, usually more swing trading. But that was my initiation into the world of trading. Now, there was no books about trading the stock market. There was no courses about it. The only books I could find on trading were about futures trading. And I did a little bit of that as well, but I really had an interest in trading penny stocks, mostly because I didn't have a lot of money back then. I was a student. I had a few $1,000s that I was investing and trading the stock market with. And, I grew that as time passed. But at some point, I decided that I was going to reverse engineer the stock market. And the way I did that is I went through newspapers, yes, actual paper newspapers, and I looked at all of the stocks that had done really well over, 10 days, 30 days, 2 months, that sort of thing. And I printed out their charts to see if there were common signals in those charts that sort of predicted when the stock would go up. Now remember, there was no books out there to teach me this stuff, so I had to figure out myself. And I was, in my early 20s and fairly enthusiastic about things. So I spent hours and hours and hours. And then really in the early days, I didn't even print out charts. I actually wrote them out by hand on graph paper. I had a stack of years worth of financial newspapers, and I would write down the prices and chart them by hand. You can imagine how much time that would take. Well, over time, and we're talking over a few years, I started to see through all of this charting, through all of this data analysis that I was doing a long time ago, I started to see that there was something to the way the market worked. And I was starting to recognize that there was patterns that occurred in the market. And it became quite clear that the stock market wasn't really fair, and that there were some people that had better information than others, and they were acting in the market and sort of telegraphing what the stock was likely to do before it really happened. Now, at the same time, I was in university at the University of Calgary. I was in the finance program, and we did a study where we looked at companies that were bought out. So there was big news. As company A is buying company B, the stock goes from $10 to $20 overnight because of the buyout. And what we studied in this class was whether there was evidence of insider trading before the stock made this big jump. And what I found was that that was in fact the case. There were evidence in the statistical analysis of market activity that there were people trading on information that wasn't widely known. And so this class was really instrumental in developing my method, because I realized that if you could follow the money that was well informed, you didn't have to know anything about anything. You just followed market action and you could predict what stocks were likely to make these big moves. And today I still do more or less the same thing. So it all started by reverse engineering the stock market, by looking through lots and lots of examples of stocks that did really well, looking for patterns in how trading activity predicted that, starting to analyze data long before data analysis was a thing, and then developing my own indicators and methods and strategies for trading the stock market. And so When I started, I didn't have a lot of money. I was pretty good at trading penny stocks. With the few $1,000s that I had, I sort of paid my way through university. And then eventually I started to get a little more capital. And then we had a really good market for a while. And I turned $30,000 into $500,000 in about 3 months. And that sort of really kickstarted my trading career. From that, I spent a few $100,000 developing tools, which you'll see tonight. I built the Stockscores website. I developed tools for a program called TradeStation. We're going to talk about all of those things tonight, but these are all things that I did, 20 years ago as I was getting started with my trading career. All right. Now, what is the most important factor for picking hot stocks? Well, very simply, it is looking for stocks that are trading abnormally. We talked about this in Saturday's webinar, and if you missed that webinar, it is on YouTube. Just go to the Stockscores YouTube channel and you can find Saturday's webinar. But what I learned early on is that the best stocks, whether it was a day trade, a swing trade, a position trade, they tended to behave abnormally, and that's what telegraphed when they were going to make a big move. So here's a stock that we'll talk about later when I go through the actual trade on this stock. But what you can see is that on April 4th, it started to trade much more volume than it was trading on April 3rd. And on April 4th, it also started to trade with a lot more price volatility. So those two things, the abnormal price gain and the abnormal volume, were very significant in terms of predicting when that stock was likely to go up. All right, so abnormal activity is, I would say, the most important factor for predicting or finding a hot stock. And again, it doesn't matter if you want to hold a stock for the next 6 months, a position trade, or whether you want to hold a stock for a day trade, a swing trade. Abnormal activity is the absolute most important thing for finding a hot stock. It is not, however, the most important thing for being successful in trading. To be successful in trading, you have to preserve your capital. You have to practice good risk management. And it's the people that are good at losing that are actually the best traders. Now that sounds very counterintuitive. Why would you have to be good at losing to be a good trader? And the reason is simple. You cannot take big losses in the market and do well. The trading game is all about numbers. You're going to do 50 trades, and out of the 50, 32 might be profitable, 28 might be losers. But if of the 32 of them make a profit on average of 3 times what you lose on your losers, then it doesn't take a mathematical wizard to know that that's how you make money. If you can make $3 65% of the time and lose $1 35% of the time, if you do enough trades, you're doing well. And that is the real essential thing that I think a lot of people have a hard time learning. And the reason, not so much learning, but doing. And the reason is simple. We have an emotional attachment to money. Most people avoid taking losses because it hurts. Most people like to lock in profits because it feels good. They hate to see a profit turn into a loser. And so there's a tendency to, sell your winners too early, or watch, a winner then start to go down and they end up sticking with it because they remember what they could have made 2 days ago. There's all these psychological battles that go into stock trading and stock investing. And those are the things that stop people from succeeding. I'm going to give you a broad overview of my strategies tonight. Any one of those strategies have rules that I could write down on the back of a napkin. It's not complicated. It is the product of many, many years and many thousands of hours of work, but the actual concepts are not difficult. Anyone can do it. The thing that will separate those people who succeed, wildly successful, with those who are, either moderate success or not successful at all, is emotional control and emotional management. and managing risk effectively. So a big part of what I teach and a lot of the hand holding I do with my students as I help them, explore that career in stock trading is about risk management and about avoiding the emotional traps of trading. Things like the fear of missing out and the fear of losing money. And a lot of these things can be easily managed with mechanical processes. And as an example, if I was buying this is a stock from today. If I was buying this stock right here, which is when the buy signal came on a strategy, and I'll elaborate on this one a little later, the stop loss point is this red line. It's defined by a certain ratio that we use, where we're using these little inflection point lows, we call these little plus signs. And so in this case, I know going in that I'm buying the stock at 60 cents and I'm going to plan to lose at 51 cents. And that means I have 9 cents a share in risk. And if I buy 1,000 shares, my risk is $90. If I buy 2,000 shares, my risk is $180, and so on and so forth. And the amount of risk that I take is dependent upon how much risk I can tolerate. Remember at the top I said, or just a moment ago, I said emotional control is the biggest challenge. And the reason we get emotional about stocks is because of our emotional attachment to money. If you're okay with losing $100, you're going to make a better decision than if you're risking $1,000, which is an amount that you are not okay with. And so good traders know what their risk tolerance is and then use that to define their position sizes. And that is a huge part of what I teach, and I'll talk more later about how you can learn my approach. All right, so that is the first little bit here. On a swing trade, same idea. The buy point is here. I'm going to plan to lose at this red line, which is just a little bit below this floor price. That floor price has meaning. We call that an inflection point. It's where the stock stopped going down and started going up. I never, ever set stops based on arbitrary percentage losses. Like, you'll hear people say, well, if the position loses 10%, I'll just get out. That's not a good way to do risk management. And the reason is because every stock has a different amount of price volatility. And so applying a 10% stop loss point to, a 50-cent penny stock is very different than applying it to a $50, large cap stock. So you have to manage risk based on the volatility of the stock, how much that stock moves. And that's why we always look to the last inflection point and then put our stop loss a little bit below that, or use certain ratios based on the volatility of the stock. All right. So my approach is strategy-based trading, algorithmic trading. It is the method that is used by the most successful investors and traders in the world. If you look at the top 10 best performing hedge funds, funds that have made billions and billions of dollars, companies like Renaissance, or there's a bunch of them. Steven, what's his name now? Drawing a blank on these guys. Anyway, it doesn't matter. Renaissance is the most successful algorithmic trading firm, and I think their average returns are like 70% for a 10-year period or something, like really a crazy annual returns. But if you read up on them, and the guy that runs or started Renaissance is a guy named Jim Simons, who's a math professor or a math doctorate, and they just study market activity and look for strategies based on math. And that's really what I do as well. I don't do it on their scale. I do it from my house. I do it from wherever I'm traveling to or that sort of thing. All I need is a laptop and, an internet connection. But it's taking in data, running statistics on that data to look for abnormal things, and then applying good risk management to the signals that we get. The hard work, the complicated work, is done by the computer. I have two really powerful computers at my desk that can monitor the entire US stock market looking for abnormal activity. I have a website that does that for all North American markets, but on a daily time frame for position trading. That's my website, stockscores.com. And so we're doing things that most people don't do. We're not doing things that you get from an average banking, website or average brokerage website. All of the stuff that I do is using my own algorithms, and I'll show them as I go through. The aim is to minimize human judgment. And the reason is simple. Humans are emotional. Humans will make bad decisions because of their emotions. And we want to take as much of that out of the decision. Now, there's still a little bit of human judgment in the decision. You still have to pull the trigger because it's not entirely automated, but it's pretty mechanical and really attempting to take the emotion out of it. Now, these algorithms that I'll show and the processes and tools that I built, some of them, like a particular strategy, I might spend 5 years developing that strategy and fine-tuning it. And I'm always coming up with new ways to trade the stock market. If you took in this presentation, I did a similar presentation back in October. Since then, I've added one more new strategy, which we're doing daily. It's a great day trading strategy, working very well. It's called an early riser. And it's a variation of another strategy that I've done for a number of years. But, this is all the product of staring at a screen for 30 years, looking at thousands and thousands of charts. And, you do this 7-8 hours a day for 30 years, you just start to see patterns and look for things or notice things that occur over and over again. So this is one of my tools. This is something called TradeStation, which is not my own program. TradeStation is a program that anyone can subscribe to. But what it allows you to do is develop your own indicators, which is what I've done with it. And so my version of TradeStation, how I use it, is different than what anyone else would because I've got my own algorithms in here. So what you see here, this day trader finder, swing finder, IPB finder, this early riser crossovers, these are all my own strategies that are written in TradeStation. It's almost like TradeStation is like an Excel spreadsheet. It gives you the ability to write your own formulas and strategies and algorithms, and then you can use it with that kind of flexibility. And a big part of what I teach is how to use this program, but also you don't even have to have the expertise to use it because I'll do it for you. This screen that you see is one that runs live during the trading day, and my students will monitor this for the signals that I teach them to look for. This is my desk, and so you can see right here, I'll circle it for you. Right here is the active live screen, which I'm monitoring through the trading day. But I've also got these 3 big 43-inch monitors where I'm monitoring all the stocks that I'm interested in. And I've got other algorithms running here. So this is, when you participate in my active live service or when you're listening to me call out day and swing trades, which is something that I do for my subscribers, this is my desk that I'm doing that from. And the layout of this is always evolving. This is pretty much the way it looks right now. And I'm ultimately looking for stocks like this. This is a trade from April 4th. The entry point was there at $2.38. And by the end of the day, it was up. It actually went up over even higher. I had to cut it off because the scale got so skewed, but it was up, over 300% that day. And I don't know anything about this company. I'll be very frank. I have no idea what they do. Couldn't care less. All I am doing is trusting math to tell me, A, that the stock is worth trading, and B, when to buy, when to sell, how many shares to buy, the risk management component, all that sort of stuff. All right, and we'll dive into this a little more as we go through the presentation tonight. All right, so what are my strategies? Well, I start the day at about 5 minutes before the market opens. So I live on the West Coast, so the market opens here at 6:30 a.m. And so at 6:25, I sit down. I don't do a lot of work before the market opens. I want to get a sense of what is the market itself going to open like? Is it going to open up or down? So for example, this morning, the market was going to open down almost 3% on the Russell 2000 index. And the reason why it opened so weak is because the consumer price index number, which was released at 5:30 my time, 8:30 Eastern time, was bad news. It showed that inflation was fairly strong, and that means that investors are worried that the US Federal Reserve won't lower interest rates anytime soon. So that was negative for the market. Believe it or not, I actually thought that was a good thing because it meant that it would be easy to spot what I call alpha stocks, which are the kind of stocks that I trade every day. I focus on alpha stocks. And alpha stocks are easier to find when the market's down. They're just more obvious. So I don't mind a market that opens down like it did today. And it ended up, we had a few good trades today, which I'll show you later on. So I'm a strategy-based trader. I have position trading strategies, which are longer term for investors. We're going to talk about those tomorrow. And again, if you want to join me for the webinar tomorrow, you can register at stockscores.com. I'll show you that page a little later. Tonight, we're talking about day and swing trading. And so I have 7 day or swing trade strategies. We're going to focus on 4 of them, but I'll just very quickly go through each of these. So the Stockscores day trader strategy is one that I prefer to use in a bullish market that's trending up, which we don't have right now. The market's kind of choppy, at least on the small cap market. The large caps are trending up, but it's only a handful of stocks. So I don't do this strategy a lot right now. Early riser is one that I do every day right now. This is my newest strategy. It's really working well, and we'll show some examples of that. Hit and run is kind of the old version of the early riser. And then IPB stands for intraday pullback. I'll dive a little deeper into that strategy in a moment and show you some example or an example from today. Superheroes, another one that I do these days. Alpha Echo is a swing trading strategy, and it is my favorite swing trading strategy right now. We do this one just about every day. I usually find a couple of these each day. Some days it's 5, some days it's 0. Today it was actually 0. But we had one that was a maybe and it turned into a yes a little later in the day, and it actually worked quite well. And then simple swing is another swing trading strategy. And again, remember, when I say swing trading strategy, I mean that the stock is held for, a few days. Again, the goal is to minimize human judgment. All right, so let's dive a little deeper into actual strategies and show you the setup, show you the economics of it, that sort of thing. So the Stockscores early riser strategy gives most of its signals in the first hour of the day. Now I say most because there are some stocks that come alive later in the day, and so we will get the odd signal that comes later in the day. But it's really within the first hour of that stock behaving abnormally, it will give our signal. And most stocks start behaving abnormally right from the open. So that's why most of the signals come in the first hour. It works great in any market condition, bull market, bear market. You'll get more signals in a bull market, but you get signals every day. I haven't had a day in a long time that we haven't had a signal. The exits for this, because it's a day trade, would be before the end of the day. We sometimes will roll those over into a swing trade where we hold for a few days if it's really working well. It utilizes an indicator called the early riser crossover, which we have available to us in TradeStation. It's called the wave up indicator. I've named it early riser, but in the active live screen, it's the early riser crossover screen. Let me just show you that. So this again is your dashboard. So if you're one of my students, you're monitoring this through the day. And when you first start with this, it's totally overwhelming. Nobody has an easy time of it in the first day. But after a week or two, it makes pretty good sense. And so if you're doing the early riser screen, you're watching this part of the screen and this part. And you'll notice that there's a little word here, cross. So when we see that word come up, then we want to take a look at that stock to see if it had the right kind of setup. Here's an example of an early riser. So you'll see there's a little blue dot right here. So that's the early riser signal. That's an algorithm that I share with my students through Active Live and through my courses and that sort of thing. It's a stock that's trading abnormally. It's very liquid. It goes up sharply, it pulls back, and then it makes the early riser crossover right there, the little blue dot. Our entry point on this stock was at about 60 cents, 60.25 cents. Stop loss was at 51 cents, and the sell point was right here at 78 cents. And so you're making 18 cents a share on a 60 cent a share trade. So it's a little better than 25 to 30%, I guess, profit. And this was a very quick one. And early risers do tend to be quick. They usually you're in and out within a couple of hours. In this case, it was less than an hour, probably only 45 minutes. And you'll notice that it was good to have sold there. You know, we don't get out at the high, never do. You're always going to get out when it starts to go down. So you're getting out a little bit below the high. But if you held until the end of the day, it's just a little bit above break even. And so again, I teach rules for when to exit as well as when to enter, because you got to do both, and very important. All right, next strategy we'll talk about. Stockscores intraday pullback. It also takes the entries off of the 1 minute chart. It is suitable for any market condition. We can do it bull market, bear market, doesn't matter. I shouldn't say it doesn't matter. It is better in a bull market, but we find opportunities in any market. We typically exit these before the end of the day. We have an algorithm running called the IPB Trader Finder, and it's running in my active live screen. I'll show you in a minute where that is. But the IPB Trader Finder does all the work for you. The computer does the work. It spits out signals. Of the signals that it spits out, you might get 15 in a day, and of the 15, 3 are suitable. And that's a typical ratio. Some days you have 5, some days you have 1, but every day there's something. If we look at the active live screen, the IPB window is right down here. And you can see that there's times in here. So it doesn't, maybe not clear, but these are the times of the signals. So this stock, ICCT, triggered signals at 11:13, 106, and 2:34. All automated. There's a little sound that goes off when they trigger. There's a little window that pops up when they trigger. And as a day trader, your job is to sit there and pull up the symbols that the algorithm identifies. When you get a signal, you pull it up, and then you apply some rules that I've taught you to look for to determine whether it's worth taking or not. All right, so that's the IPB Finder. Here is an example from today. So this is ICCT. Now, I just want to show you on this list. So there you see ICCT right there. And you can see that the times were 11:13, 106, and 2:34. Now, if I go to the chart and we look right here, this is the one that mattered. See how there's a pink and yellow dot there? That's an indicator I've created called the action candle. It means there's action in the stock, which is what our statistical analysis looks for. It's abnormal price gain, abnormal volume on that 1 minute bar. And so that told me that there was some strong buying coming in. We assume that the reason there's some strong buying coming in is because there's something happening. There's some good information coming. And what we know is that there's some people that follow companies very closely. They get better information than others. They are the ones who tell us what to do. And they tell us what to do through abnormal activity. So when we get abnormal activity, abnormal price gain, abnormal volume, it's because someone is buying aggressively. And when it starts from the right pattern, we know that there's a good chance it's going to go higher. In this particular case, it's breaking a pullback. It makes an action candle. And so our buy point is right there at $1.35. And our stop loss point is at $1.22. And by the end of the day, it was at $1.71. And so that's a 36-cent per share profit on a stock that cost $1.35. Don't be scared of the fact that these stocks are cheap, because they're very liquid. They're easy to move in and out of. And these lower price stocks are the ones that make the big moves. You know, we're not buying stocks for our retirement portfolio when we're trading. We're buying stocks that can make big moves. If you want to learn about buying long-term, good quality companies, come back tomorrow. I'll talk about that tomorrow. Tonight is all about day and swing trading, and the majority of good day trades come in stocks under $10. All right, so that's an example of an intraday pullback. Now, the next strategy that I love to do is the Stockscores Superhero. It looks for entries on the 1 or 2 minute interval, usually the 1 minute chart, but sometimes the 2 minute. Depends upon how actively traded the stock is. It's effective in any market condition, but it is better when the market is trending upward. So when the market's moving up from the open, it works better. Our exits are going to be before the end of the day. And we get signals throughout the trading day on this. So it's a strategy you can apply all day long. In fact, most of the signals come after the first hour. So the other two strategies, well, the early risers in the first hour, the IPBs can be all day, superheroes can be all day. And it utilizes my Stockscores message candle indicator and my expected abnormal volume indicator. So these again are algorithms that I've written for this program, TradeStation, to look for signals. And so the superheroes are actually displayed in the IPB window as well. It's just a different pattern setup. And as an example of one from today, this is a stock that you can see came alive abnormally just after 12:30 today. It then built a predictive pattern. For those of you that know a little bit about chart analysis, you will know that this is a pennant pattern. And it made the action candle, you can see the little yellow and pink dot right there. So it made the action candle, breaking through resistance from low volatility, from optimism, with abnormal activity, and that told us that this stock had a high probability of going up. It was not guaranteed to go up. Let me be very clear, we're playing a numbers game. This is one that worked today, but there's also going to be losers. In this case, I would, going into this trade, I would know that it has a 65 to 70% chance of working if history is my guide. And it worked quite well, moving up from $43.58 to just under $48. So this is a stock that's more capital intensive because it's a larger cap stock. It has a much higher price. Not everyone wants to trade these stocks because, where the last position that we talked about, you might have a $2,000 position. In this one, you might have a $10,000 position for the same amount of risk. And, for a lot of my students, they don't want to trade these higher price stocks, but that's fine. You just let it go. In this case, though, it moved quite nicely. For every $100 of risk, this trade made about $450. All right, and the last strategy that we'll take a deeper dive into tonight is the Alpha Echo strategy. This is a swing trading strategy. It's my favorite swing trading strategy right now. In this case, the entries are on the 13-minute interval. So instead of the 1 minute or the 2 minute, we're actually buying off of the 13-minute interval. It works in any market, up, down market. It works better in a bull market. Exit can be typically after a few days, could be as much as a couple of weeks, but usually 3-4 days is our exit. Most entry signals for this strategy come early in the day. So it's nice for people who don't want to monitor the market all day long. Maybe they can do some trading before they take their kids to school. So they've got an hour and a half in the morning. This is a great strategy for that. Or before they go to work. And then, during the day, as long as you can sort of keep an eye on things from your cell phone or from an iPad, you can do this strategy without being a full-time trader. It utilizes the swing screen in the Active Live desktop, or you can apply it yourself in TradeStation using the Stockscores action candle. And so if we go back to our desktop here, this is the swing trader section right here. And it gives you the signal and the time. So for example, CRMD gave a swing trade alert at 10:22 this morning. And by the end of the day, it was up 8 times its risk. So that means for every $100 risked, it made $830. Now, if you look at the times, you can see most of them are in the first hour. This is Eastern time. So 9:43 is 13 minutes after the market opens. 10:09 would be the third 13-minute interval of the day. 9:56, the second. Each one of these is something that we will look at. So for example, TPET was my top pick of the day. It was, in my mind, the best looking chart, and it gave a good confirming signal later in the day and went on for quite a nice move. CGC is one that I bought a few, like last week, a little over last week, on April 2nd there. It's a stock that was in play. It was trading abnormally. It made a move upward. I don't like to chase upward trends, so I don't want to be a buyer up here. I want to wait for the pullback for the stock to go on sale, and then I buy the break of the pullback. So that is essentially the idea, the concept behind an alpha echo. This is the alpha. It's the strong move up that tells me the stock has got something going on. It's like the alpha dog in the market. It makes a pullback, and then it breaks the pullback. That's the echo. And the echo tends to lead the next move up. And so in this case, you know, CGC, which is from a hot sector, the cannabis sector has been quite hot the last few weeks. So it started at $8.08, and within 2 days it hit $11.50. Okay, that's a swing trade. Again, not as demanding on your time, but still you can get nice returns out of it. Now, I know there's some questions coming in. I will answer your questions. I'll just review them at the end of the presentation because I like to keep the flow going rather than stop a lot. So just don't think I'm ignoring you. I do see the questions coming in, and I will answer those at the end. All right, so how do you do this? What do you need in order to be a trader using my approach? Well, it comes down to knowledge. You need some core skills. Stock market basics. When I teach people, I assume that they know very little about the stock market. You don't have to know anything. I'm going to teach you the basics, like this is a stock chart, this is a candle, this is volume, this is, you know, the types of orders that you can place with your broker. All of those things are the basics that are taught in the foundation modules of my online course material. Then I have to teach you how to analyze charts. So that's where now I'm going to teach you a skill. It's a skill that once you learn it, you can analyze any chart in a few seconds. As I said on Saturday, you'll start out, it might take you 10 seconds to apply the method, but after some practice, you know, you practice for a few months perhaps, you might be doing it in 2 seconds. I've been practicing for 30 years. I can look at a chart and in 1 second know whether it's worth considering or not. It's not complicated. It's like any skill. You just have to practice. You want to be a good skier, you go skiing a lot and you become a good skier. You want to be a good stock trader, you practice, you do what I tell you, you do it over and over again. Repetition will give you the skill. And the beauty is it's a skill that you can do your whole life. You know, you can't necessarily ski your whole life. Some people maybe do, but you can trade for as long as your mind is sound. And I have students from the ages of 17 to 80, and even beyond. I have some students that have been with me for over 20 years using my tools and things. And, you know, they're well past their retirement age and they're still trading and investing in the stock market. You need to learn how to manage risk. As I said at the top, risk management is so important. You have to preserve capital. That's our #1 goal, preservation of capital. Because if you lose all your money, you're out of the game. And I'm not a gambler. I don't gamble in the stock market. I trade something that has always worked for me. And if it stops working, I stop doing it and try to figure out what's going on. And always evolving, always trying to find new ways to make money in the market. And a big part of that is good risk management. Money management, very important. How much risk do you take? How do you tolerate risk? What amount of potential loss bothers you? Those are all components of money management. Strategy development, knowing when to buy, when to sell, the process for identifying opportunities. That's kind of the mechanics of finding the trade and then executing the trade. You know, how do you put in a order with your broker? What's the difference between a market order and a stop order or a limit order? And why would you use one or the other? These are all things that I teach because I assume that people know nothing. Now, I have lots of students who know lots. I've taught hedge fund managers, I've taught brokers, I've taught people that work at brokerage houses, I've taught people that have been trading for 10 years. I guarantee you, no matter how much you've traded, there's going to be things that I will teach you that are new. You may come in knowing 80% of what I teach you, but that little 20% can make a big difference, especially if it revolves around my indicators, which are proprietary, or around the emotional side of trading, which takes a long time for some people to get good at. So what do you need? Strategies. Again, rules for when to enter, when to exit, sizing positions. My strategies are well tested. I spend thousands of hours developing these strategies. For example, the superhero strategy or the IPB strategy is one that I developed in 2016 when I decided to take a year off, and I moved to Maui and rented a condo on the beach, and just sort of developed some new strategies and tested them exhaustively, developed new indicators because I could really see how the market was changing, and you had to be an algorithmic trader then. Before then, I was sort of a half an algorithmic trader, but I became more of one around that time because the market was really evolving. And that's 8 years ago, and it's significantly different today than it was 8 years ago, and yet many things are the same. It's still fear and greed and human emotion and taking advantage of human emotion, taking advantage of the stock market not being fair. The power of statistics, very important. When I develop a strategy, I build spreadsheets like this. This spreadsheet has thousands of lines of trades that I'm analyzing using computers. So when I teach someone a strategy, when I say, buy when this happens, sell when this happens, it's after I've done all of this work. You could do this yourself. If you're into data analysis and studying things, by all means, like I did it, anyone can do it, but it takes a long time. It literally hundreds and hundreds of hours for a strategy. I've probably spent 30,000 hours analyzing the market and learning how the market works. And I can share that with you because that's something that I offer. Here's another part of that spreadsheet just showing how we calculate profit and position sizes and capital required, all kinds of things. Tools are important. Tools give us an edge. Market scanning tools, which are things that I'll talk more about tomorrow. So tomorrow we'll talk about doing market scans for investing, because that's the sort of the focus of tomorrow's webinar is investing. And I'll show you some market scans. We'll actually pick some stocks. I picked a couple of stocks on Saturday as well. I think one of them went up 33% on Monday. So hopefully we'll find something like that tomorrow. Another good reason to check into tomorrow's webinar. And then TradeStation is the tool that I use for day and swing trading. There's other real-time charting programs. Most brokers have them. There's programs like TC2000, TradingView. Most of my students use TradeStation, but some will use those other tools as well. TradeStation's my preferred one because it uses my indicators. Like my indicators are written for TradeStation. They don't work in other programs. And so that's the benefit of TradeStation. And I know a lot of people in Canada will say, well, I can't get a brokerage account with TradeStation, and that's true, but you can still subscribe to TradeStation. I get a little bit of a discount for my students. It's about $80 a month for that platform, but it's more than worth it. You can pay for it in one trade. We do post-trade analytics using Excel spreadsheets and keeping a journal in something like Word. The Active Trader Live screen, which is what I've been showing you tonight, is an automated service where it does all the work for you to identify the signals, and then all you have to do is evaluate the signals and execute the trades. Another thing that you need is process. Process is like the step-by-step plan for implementing the strategy. You know, if you have some rules that are great and you know that they work, but if you can't apply them in a timely fashion, then it's kind of useless. And so we need tools that find these things as they happen. And that's, where you have to have some computers that have some power. And that's what I built. So you don't have to have the power, but my algorithms are running on the most powerful computers you can get from Dell, basically, and they're very fast, and they do this analysis on the entire market and looking for the things that we've talked about tonight. It's very mechanical, it's efficient, and it removes emotion. So the strategy process that I do through the day is I start the day, again, 5 minutes before the market opens, trying to get a sense of the market factor. And what that means is the market helping or hindering? It's always the question I ask. Is the market more likely to go up from the open or down from the open? So for example, this morning, the market gapped down quite a bit, like right off the open, I think the Dow was down a little over 400 points. So that may seem really bad, but it's actually positive from a market factor standpoint because it means that there's not that much downside and it's probably more upside from the open. So that's my thought. Now, on a day like today where you have a big down open, there are going to be fewer stocks to trade because there's not as much going on from a buy side. But the buy signals we do get, they're going to probably be a little higher quality. So then we start scanning the market for these action candles that I talk about all the time. And the computer is doing most of that work. When we get one, whether it's a 1 minute action candle or a 13-minute action candle, depending on the strategy, then we assess those stocks to see if they satisfy the other rules. If they do, we enter the trade. Some trades you got to be fast, like a day trade, you should enter that trade within 5-10 seconds, ideally. Swing trade, you might not enter it for half an hour, it just depends. Then once we're in the trade, we monitor those trades for exit signals. And you don't have to monitor the market that closely for that anymore. Once you're in them, I check my stocks like every 10 minutes, 15 minutes, sometimes even longer. And I can do it remotely. Technology now allows us to do that when we're driving down the highway. It's not a great idea to be distracted while you're driving, but the point is you can do it from anywhere as long as you have an internet connection. We're looking for the market to potentially have a change of focus. So sometimes you get the market reversing and going the other way, and then you got to respond accordingly. Now, as I said, Active Trader Live automates this process and does a lot of the work for you. And then the other thing you need, which is perhaps obvious, is capital. If you're going to trade the market, you have to have some capital. I started trading with about $3,000 of capital many years ago, and I turned that into a nice living. It's one of those things where it starts slow. It took me a while to go from 3,000 to 30,000, and then I went from 30,000 to $500,000 in 3 months. And that sort of kicked off my career. This was all back when I was in my 20s, and been trading ever since. Lower price stocks will need less capital. So those who have less capital, then you're going to focus on lower price stocks under $10. As I've said tonight already, our main goal is capital preservation. We want to start trading with no risk, just practice. So we have a practice tool at tradescores.com where you can do simulated trading, and you can do it on paper and pencil, paper trading in Excel, but just get good on paper. I always tell my students, I've given you this great information, these strategies, but you still need to practice them. It's like having a coach that teaches you how to ski faster or better. You can read the book, you can listen to the coach, but you still got to go out there and practice a bit because you don't want to get hurt unnecessarily as you're learning. And a big part of what I do is, guide my students, support my students as they go through that process of practicing. We are on live every day in the market, every day, Monday to Friday. And I call out trades in the early part of the day. And then at the end of the day, I review all of the trades that people ask me about that they took. I bring up some that they should have taken or that I took. And, we just learn. Every single day we're learning. And, you do that for a couple months. You go from knowing nothing to being able to do it on your own and have a pretty good process in place. As you are successful, increase your risk. And if you're not successful, decrease your risk. Why? Because our number one goal is capital preservation, right? So, you have to be able to, or willing to risk something. If you're going to make a go of trading, it's like any other business, you got to take some risk. But I don't want people to gamble in the stock market or take wild risk. You need to take it one step at a time, and I'm there to hold your hand through that process. So what will help you succeed? I've trained a lot of people, like over 1,000 people over the years, probably even more. I've had books that I've written, all that sort of thing. I can tell you that there's the same things that happen over and over again. Trading is simple, but it's not easy. So the rules are simple. I can teach anyone the rules in a weekend. You can watch a couple of my videos and learn the rules, and then you just got to practice. But the thing that makes trading challenging is being human. Human beings are emotional, most of us. Maybe psychopaths who are not as emotional, they might be better traders. But most of us are emotional. We don't like to lose, we like to win. And that means that we make mistakes as a function of our emotional attachment to money. And that's where I really need to help people go through the process. I just think about today, for example. I had a couple of people say, should I buy this stock now? And, it was a stock that I had recommended, say, an hour earlier. It had already gone up a lot. And someone was asking me if it was now time to buy. They were waiting for the proof in the market, maybe. And so I had to say, no, it was a good trade an hour ago. Now it's a good hold. Now we're looking for when we're going to sell it. We don't want to be buying this now. You missed the boat. Don't worry, there's another boat coming, but this one, the ship has sailed. And that's a function of what is commonly referred to as the fear of missing out. People will chase stocks far beyond where the right buy point was because they see it going up and going up and going up, and they get emotional and think, oh, I should have bought it an hour ago. I'm going to buy it now because it's proven that it's a good one because it's gone up a lot. Well, unfortunately, that's usually just before the stock tops out. So as you learn and as you apply what I teach, you got to practice, you got to focus, you got to be determined, you got to have discipline. You do not want to be a gambler. There's lots of gamblers in the stock market. It's the world's biggest casino. But gamblers take trades that have a negative expected value. Good traders take trades that have a positive expected value, where the likelihood of being profitable is positive. So how do you become an active trader? Well, what I did is I developed and tested my own strategies. That took me 8 years, and I paid a lot of expensive lessons, paid a lot of tuition to the College of Trading. At one point, I was down $30,000 in my learning process. But eventually I figured it out. The other option, which I didn't have back when I started, is get someone to teach you. So I can teach you. You can benefit from my 30 plus years of experience and learn the approach from me. There's other people out there teaching. A lot of them don't know what they're talking about. There's a few probably that are good, but be very careful about who you learn from, because if a person is only teaching and they're not trading every day, then they really aren't in touch with the market. You have to be doing this every day because it's always evolving. It's always changing a little bit. The core concepts are the same, but I'm always making tweaks, and you can't do that if you're not in front of your screen every day. So what I have done is created an online learning center called the Stockscores Education Center, where you can learn the market, or learn trading, sorry. Let me do that again. I just want to show you how it looks. So this is the Stockscores website. And if I go into Trader Training Education Center, this is a member-only area. So if you're not a member, you won't be able to get access to this. But in here, I've got all of these lessons. There's written part of the lesson, there's a video, and then there's strategies for investing, which we'll talk about tomorrow. There's strategies for active trading, which we've talked about tonight. And we'll talk more about that in the webinar on Saturday. So this coming Saturday, I'll give you a more in-depth tour of this. But that's what the Education Center looks like. And there's two basic groupings of course material. There's the investor course, which is focused for the person who really wants to manage their retirement portfolio better. You know, whether it's a TFSA, RRSP, 401k, Roth IRA, all the different retirement portfolios, or just your longer term savings. That's the investor course. That's what we'll talk about tomorrow. The goal there is for you to beat the market. You know, the stock market earns 8 to 10% over the last 10 years. It's averaged 12.8% return. So if you just want to earn the market return, which is great, just buy an index ETF. You don't have to do any courses. If you want to beat the market, that's what I'm here to teach you. Then you're trying to earn 20%, 18%, 31%, whatever you can do. That's how you retire quicker. That's how you build wealth, by being able to beat the market. And so my strategies, the aim is to beat the market. And the methodology for investing, I'll talk about tomorrow, but the investor course gives you access to my investor strategies, the market scan tool, which we'll show tomorrow, email support from me, and then you can continue to use those tools at a cost of $300 a year. The active trader course is more what we've talked about tonight. It's everything in the investor course plus the active trader strategies. So the ones I've described tonight, you're going to learn the specific rules of those. You still get support from me, not only by email, but also in Active Live if you are on Active Live each day. You get access to the tools, you get my real-time indicators, and you're eligible for Active Live, which is a monthly subscription. Again, I will dive into this more detail on Saturday. I'm just trying to give you the broad strokes. For those who want me to guide them through the whole process, if you want me to, teach you 14 one-hour classes, which we're going to do 2 a week from now until the middle of June. So over 6 weeks, we're going to do basically 2 classes per week. And each one will be me teaching you something that's in the education center, but we'll take a deep dive into it. So I'll teach you how to read a chart. I'll teach you how to use TradeStation. I'll teach you how each of the strategies works. And we'll use real examples from, the time that we're writing it or doing that. So that's a mentorship program. I do that for a relatively small number of people. 15 students is the limit, because if there's too many people, I can't give the individual attention to the questions and that sort of thing. But again, we'll talk more about that on Saturday. There's currently 9 spots left. So 6 people have already registered for this. And I'll show you in a minute how you register for these things. Now, I'll just leave this up for a moment. This is some feedback on the mentorship course, but I'm going to just take an opportunity to get caught up on a few questions. There's been a lot, and I'll try to answer these as best I can. We may miss some, but so on the Stockscores website under portfolio, there are indicators for crossing a threshold. Is that the indicator signifying the increase after a pullback? No, that's not. That's something totally different. It's more useful for an investor. So that's in the watch list creator. You can get an alert when the stock crosses above a certain price level. Is the abnormal activity the number of times the stock is traded? No, it's more related to the liquidity of the stock, the volume traded of the stock, and the price gain, whether it's statistically significant. What qualifies abnormal volume? Is it a ration from the previous 10 days? No, it's a little complicated, but the computer does all the work. It's looking for statistically significant abnormal volume relative to the last 30 bars. So if it's a daily chart, then it's the last 30 days. If it's a 1-minute chart, it's the last 30 minutes. If you switch a day trade to a swing trade, do you generally hold it through a weekend or exit? You could. I mean, you could hold it for two days, 2 weeks, 4 days. Just depends when we get a sell signal. The weekend is irrelevant, whether it's a Thursday to a Friday or a Friday to a Monday, doesn't matter. What platform is Tyler using showing? That was TradeStation. I think I answered that already. Now I'll jump back to these questions a bit. I just wanted to get a few. Let's maybe move on and I'll come back to some of the questions because there have been a lot. Anyway, here's some comments from people that have taken the mentorship in the past. Now, Active Live is a service that I offer to active trader students of Stockscores, and it's where you can watch my analysis screen in real time. My primary goal is to teach people to do this for themselves, but I do call out some trades, like I'll say Alpha Echo Swing on ABC right now, and people will often just do those ones. But I don't want you to be dependent upon me. I want you to learn how to do this for yourself. So to me, those are teaching moments. Like I'm saying, here's one, you should have seen this one, and I call it out, and I'll say this is a good one. And over time, when you see me do that, then you're going to start to say, okay, now I understand what we're looking for. When you first start out, you feel a bit lost, like everything. And so it takes a little time to learn. So Active Live is a great learning tool, but I also help people make money every day. It's real time. It's a live webinar. I do it every day. It's automated. We get instant signals. Most of them we don't take. We get lots, but we evaluate everyone and look for the good ones. And so in a day, you might get anywhere from 2 to 10 good trades. Depends on the market condition that day. Like today, there was probably 4 early risers, 1 swing, couple of IPVs, maybe one or two superheroes. And then I review all of those at the end of the day. It's only available to Stockscores active trader members. You have to have done the active trader course. And it's not solely because I want you to learn the stuff. It's also as a gateway. I don't want thousands of students using this. I don't want lots and lots of people in this service, because if too many people use it, you've got everyone competing against each other to buy the same stocks, and it just doesn't work. Remember that I'm a trader first. I sit in front of my screen. I buy the same stocks that my students are buying. And if there's too many of us chasing after them, then it starts to erode the profitability of it. So one of the reasons why you have to be an active trader member is because there's a cost to being an active trader member, and it just means we won't have an endless number of people using it. This is the active trader screen, and every day me and my active trader members monitor this screen all day. I've talked about this enough tonight, and we're looking for the signals. I'll go into this a little bit more on Saturday. Now, twice a year, I do live training. So the live training is to complement the online material. And so I complement that with a couple of classes. They're hour and a half long. This April, they're on Monday, April 22nd from 6 until 7:30. Tuesday, April 23rd from 6 until 7:30. And that's where I'm going to teach you the theory. So we've kind of touched on things, but we haven't taken a really in-depth look at those things yet. So that's what we do those 2 days. That's 3 hours of theory. And then for the next 2 nights and Saturday morning, we're going to practice scanning the market for investing opportunities. So it's not day trading, it's the investing stuff. So we'll do market scanning Wednesday, April 24th for an hour, Thursday for an hour, and then Saturday morning from 9 till 10. Now, for those who are on the active trader path, who want to day and swing trade, you get a free month of my active trader, active live service. So you can watch how we build watch lists and review trades, and it's tons and tons of learning over that free month. After that free month, it's $245 Canadian per month to continue that service. And honestly, you can pay for it in one trade. And we usually find one good trade, well, at least one good trade every day. Today, there was probably 5, I'm going to say there was 8 good trades and probably 5 profitable and 3 losers. So, you could pay for active live in one day. All of these classes are recorded. So, if you can't come to the Tuesday class because you go to ballroom dancing on Tuesdays, no problem, you can watch the video later. It is better to attend live because then you can ask questions live, but just keep that in mind. All right, now there is a special offer. There's 2 things that I'm sort of sweetening the pot with tonight, and that is if you register for the course before Thursday next week, either course, you're going to get access to those live classes that I'm going to teach the following week. So you'll get the Stockscores Express classes where I'm going to teach you the theory, and you'll get the investor market scanning classes. And if you do the Active Trader course, you'll also get a free month of Active Live. So the deadline for that is Thursday, April 18th at 11 p.m. Pacific time. And I always have people that register like right up to the minute before, but I encourage you to register sooner, because as soon as you register, you get instant access to the material. You can start learning right away. You can start asking me questions right away. But in theory, you can leave it until 10:59 if you want on Thursday, April 18th. Now, pricing. This is all Canadian dollars, and Canadians have to pay GST on this. If you're from somewhere outside of Canada, this is the price in Canadian dollars. So if you're in the US and you see $29.95 Canadian, that's about $2,400-$2,300 US. In addition, you get a $500 discount if you use these discount codes. Okay, so everybody remember these codes, write them down. If you want a $500 discount on the investor course, on the original purchase of the investor course, not on an upgrade, it's that's the code right there, 500 ITA24, that's an I. And then if you want a $500 discount on the Active Trader course, it's 500 ATA24. So that means this turns into $24.95 Canadian plus GST for Canadians. This turns into $34.95. This will be $54.95. Now, if you took the investor course in the past and you want to upgrade to the Active Trader course, it's $1,250. The discount code doesn't work on this. It's only if you buy the original course. And if you want to take the mentorship course, then you're going to pay an extra $2,000 for that. And I'll show you how to do that in a minute. You have to buy the Active Trader course first. You have to log out of the website and then log back in and sign up for the mentorship course. There's, as I said, I think 9 spots left in that. All right, so before I continue, and I got lots of questions, and I'm also going to walk you through a couple of trades just to sort of give you some good examples of these. But I just want to launch this poll. And as I said on Saturday, I don't like bugging people. I don't like spamming people. So if you would like some follow-up emails regarding the courses, please answer appropriately here. If you don't want any follow-ups, then just say no and I won't put you on the list. In the meantime, while that's up, I'll just look at some of these other questions. There are many hot stocks that show all the buy signals but then drop price significantly over the next day, week. Is there a way to be more selective to differentiate the hot stocks that will continue going up versus the hot stocks that are just a short-term pump and dump? Absolutely there are. There's more to the question, but I think that's the basic gist of it. Yeah, that's what I do, is pick the ones that have the best potential, but don't be fooled. Like, I'm often in and out within 2 days because they are pump and dumps. You can make lots of money from pump and dumps. I'm not buying these companies because I like their story or because I think they're good companies. I'm buying them because they're going up in the right fashion. And so we have to have an exit strategy. For example, I bought a stock last week and sold it, made a nice profit. And over the next 2 days, it dropped, I don't know, 40%, but I'd already sold it because I have a method to get out as well. And I have a method to not chase stocks higher where you're buying, with too much risk. So that's a really, really important part of what I do. A few of you are asking me to look at some individual stocks. We won't do that tonight. We will do that tomorrow. I will look at some stocks. So if you have some stock questions, bring those tomorrow. I'll try to help you on that. Hello, is TradeStation available in Canada like Alberta? Yes, but not as a brokerage. You cannot have a brokerage account with an American broker if you're a Canadian, but you can subscribe to it. And again, my students get a little discount on that, but that's what Canadians have to do. Can you recommend a laptop to run TradeStation software? Yeah, but I'm not going to do that tonight because that's a longer discussion, but I use a Dell XPS laptop. And you want to have fairly good processor. You want to have solid state memory, which nowadays they all do. All right. Have you noticed AI being used in the market? Not really. Algorithms, yes. AI is always one step ahead because it has to collect data from someone who's trading. So let's say let's say I'm a good trader, the AI machine is following me, it's always one step behind. Now, maybe that will change one day where it starts to do the kind of work that I do. I don't doubt that it won't, but it's not there yet. I'll take this poll down now. Thanks for answering, and I will send out emails to you guys over the next few days. Do you know if the course fees are tax deductible? They are for, well, I don't know about all jurisdictions, but in Canada, you should be able to deduct them against capital gains as an interest and carrying charge. Now there's a bunch more questions. I'm going to just keep going with the presentation. I'll try to come back to some of these in a minute. Now, how I measure performance is something that we need to understand, because I'm going to show you two specific examples in a minute here. So we measure performance not by percentage gain, not by dollar profit. We always measure performance by the reward for risk ratio. Now remember, our number one goal is capital preservation, so we're always going to plan to lose. We're going to be good losers. If the trade doesn't work, we take a small loss, we move on. If it is working, we let it run until we get a sell signal so that we can have bigger profits than our losses. We're not worried about success rate. I know traders who are successful, profitable, being right only 30% of the time. I try to push towards the 60 to 70% success rate, but it's not 100%. Don't ever think that. If you want to be right all the time, you will go broke. It's just not possible. Because people that want to be right all the time hang on to their losers, and guess what? They have big losses that outweigh their profits. Okay, so let's look at a couple of trades, and I'm going to go through these in terms of reward for risk and capital required for each one. Okay, so the buy signal on this was right here. It's a little bit hard to tell because the stock went up so much that the scale got stretched, but this was on April 4th. And the buy point was $2.38, and we used $2.15 to size our position. So the difference between those two is 23 cents. All right. Now, if we buy 1,000 shares times 23 cents a share in risk, our risk is $230. Now, that's an okay trade to take if you are comfortable with $230 of risk. If you're only comfortable with $100 of risk, then you're going to buy 400 shares. If you're comfortable with $500 of risk, then you're going to buy 2,000 shares. So the amount that you buy is determined by your risk tolerance. If you've got $1 million, your risk tolerance is going to be higher than someone with $3,000. However, when you're learning, you should start with a very low risk tolerance because you have to practice. I've never seen someone who followed my rules exactly in the first day of trading. It takes some practice. That's why I run this service every day, so I can keep people on the right track. Okay. Now let's just use 1,000 shares times 23 cents of risk. And the stock is at $2.38. So 1,000 shares is going to cost us $2,380 plus commissions. Let's call it $2,390. All right. Now, in this case, we use these lines, which are driven by the space between the entry point and support. These are called risk reward lines. I go into that in more detail in some of the modules in the course material, but they help us with our exit method. So what we look for is if it closes above one of these lines, we're going to plan to sell if it goes down below the line below. So you can see that this just keeps going up. Never really, it closes above this line, it doesn't go below this one. It closes above this one, doesn't go below this one. It only goes below right here because it closed above this line, and that means we were planning to sell if it goes down below that one. So in this case, it made 8 times its risk. That's our risk reward ratio, or reward for risk ratio. So if we bought a stock, let's say we bought 1,000 shares of this stock, we took $230 a share in, or $230 of risk, multiply that by 8, we get our total profit, which was $1,800 on a position that cost us $2,390. Now you're going to pay commissions on the way out. You're going to have a little slippage. So let's say it's $1,800. So in this instance, you made an $1,800 profit on a $2,300 position. This was a great trade. We get like a couple of these kinds of big winners a month right now in a good market, like, you know, when the COVID recovery was underway in 2021 to 2020, we were getting like 5 of these a week. But it's a little quieter now, but we still get these big winners on a regular basis. Most of the trades that we do are more like wins of 2 RR, 3 RR, 4. Sometimes we get a 5. That's the general trend, but this was a real solid one. Okay, so that's the basics of reward for risk and planning to lose. Here's another one. This is a swing trade that I did. This is one I was talking about earlier that went down after I sold it. About, maybe it's not 40%. Let's take a look at what it is. All right, entry point was here. This is on the Alpha Echo strategy. So the buy price was $1.60 and the support price was $1.55. So we had a mere 5 cents a share in risk. So if I buy 1,000 shares, my risk is $50. If I buy 2,000 shares, my risk is $100. You get the idea, right? So let's buy 2,000 shares. It goes up and we get an exit point right here, again, using these lines. That was at a 5 times risk. So it says 600%, but that's 5x. So it made 5 times the risk. And so it made $500 for every 2,000 shares bought, and 2,000 shares cost $3,200. So it made a $500 profit on $2,000 position. Is that right? No, $3,200 position. So as a percentage, pretty good. If you wanted to make $1,000 on this trade, then you had to take more risk. You had to take $200 of risk, which meant your position size was 4,000 shares. 4,000 shares times 5 cents is $200 of risk. It earned 5 times risk, so it made $1,000. All right, so those are 2 real trades from the last week or so. And then notice, you know, someone was asking me about these stocks that are pump and dumps. I don't know if there's a pump and dump, but I sold it up in here around $1.90, and yeah, it's not a big sell-off, down to $1.72, which is today it closed at $1.79, and it may start to go up again. Actually, it gave sort of a new buy signal here, not a real strong one, but you can see there's a little pink dot there. So those are a couple of examples. All right, so tomorrow, another webinar, and let me show you how to register for that if you're not already. Just go to stockscores.com, go to Trader Training, upcoming events, scroll down to how to invest in the stock market successfully, click on register online, and then you put in your first name, last name, email address, register. It'll send you a link so that you can log in tomorrow at 6 o'clock Pacific time. Tomorrow, we will talk about investing. So if you have no interest in day and swing trading, tomorrow's your day. Okay. Now, if you want to register, go to the Stockscores website. I'll show you where to go. Go Trader Training, learn how to trade. And there's some videos here on the different courses. You can register right there. Just order Active Trader. It'll walk you through a process. It's all automated. So once you've registered, you will have access right away. And so you can start learning right away. The deadline is Thursday next week. Lots of people will register early because they want to start learning right away. And the earlier you start, the better, because we are going to have those live classes starting on the 22nd of April. And you know, the more time you've had to go through the material, the better. Again, the bonuses, you want to use that discount code. So you get a $500 discount with the discount code. And let me just show you that again. So if I go here and I go order Active Trader, turn that off, and enter discount code, I'm going to go 500 ATA 24, apply discount. See, now the price is discounted to $34.95 Canadian. Notice it says here $300 yearly. That's you get 6 months for free. So you're not going to get charged $300 now. It's only in 6 months, and you don't have to. You can opt out of that if you want. That's for your access to the market scan tool. That's the recurring cost for the market scan tool. And then you go to the final checkout and just complete like any other website would do. All right, turn that off. If you want to email me with any questions, there's my email address. And subscribe to the YouTube channel. I'm going to try to answer some more of these questions. There's a bunch. I know I'm going to miss a few. There's some that are quite long, and I'm not going to read through them because it's just too long. How current is the data on the Stockscores site? Stockscores is meant for investing. It's 15-minute delayed. Do you update the training modules as conditions change? Yep. How you get access to the scanners and indicators? You have to be a member of Stockscores, so you have to take either the investor course or active trader course. What is the cost of TradeStation? It is, my students, I can get them a deal. It's $79.95 a month. I use wealth charts. Can your indicators be used on this platform? No, only used on TradeStation. Does TradeStation provide data for TSX stocks? It does not, unfortunately. They keep telling me they will, but they never do it. How many total algorithms have you created, and how often do you have to implement them in your trading strategy? Well, I was looking at it today, actually. I probably created 100, but we use less than 10. A lot of them are old versions of the current ones. What's a good initial capital to start day trading? I want people to start with $0, just practice. In order to take a couple trades, you probably need to have $3,000. I have paid the initiation fee for Active Trader in the past and was using the Active Trader Live. I had great success using it. If I wanted to fire that up again, do I just need to pay the Active Live monthly fee? Yep, correct. Yeah, once you've paid the upfront fee, it's just subscribing to Active Live. Is there a monthly cost for the investor course? No, it's $300 a year, but that's just for the use of the tool. You get 6 months free. Please let us know where to find a description for the investor course. That was on my website there I just showed. So if we just go back here, go to Trader Training, learn how to trade, all the descriptions are on that page. So there's lots of information there you can check out. And I think I got all these questions. Do you have to use TradeStation? Can you use Thinkorswim? Lots of people use Thinkorswim, my students, but only my indicators only work in TradeStation. So a lot of times people will use Active Live, which is, you know, monitoring my TradeStation, but then they're, you know, using whatever platform they like for their own charts. You can use whatever platform you like. I think TradeStation is better because it has my indicators in it, but if you like the one you're on, then that's fine. Okay, I'm going to end it there because I said we were going to go an hour and it's now an hour and a half, so it's gone much too long. But we're back on tomorrow, and I hope you've enjoyed tonight. Hope you learned something. Lots more learn tomorrow, more targeted at investing and using the Stockscores tools. Thanks everyone for joining me, and I will see you then. Good night and trade well.